Hello, welcome to this very special coverage of the kind of move that came into Reliance Industries because of the Jio Bonanza. I'm Niraj Shah.
Hi there, I'm Gaurie Dwivedi joining us from the Delhi studio. In fact, the Jio Bonanza, of course, has been very positive as far as investors are concerned, shareholders are concerned. But it also sends a signal to investors that, when RIL starts charging its customers from April 1, the cutthroat competition in the sector will reduce as freebies, of course, will come to an end. But is the street really being too optimistic about RIL's prospects is something, Niraj, that we really need to find out.
Yeah, but for today, Gaurie, it was the star performer in trade. It zoomed some 11% at close. It ended at the high point of the day. And this is a day after, actually, quite surprisingly, that it made these announcements during market hours yesterday, but a day after what the company said that it'll end the free data services and begin charging its customers from the 1st of April. Investors lapped up the stock. It's an 8-year high, and the street lauded the attractive tariff plans. And the company is offering them starting, I think, the first day of the next quarter, and that is something that investors are probably looking up to.
That's correct, Niraj. But incumbents also have bucket plans. If you really look at an apple-to-apple comparison, Bharti Airtel, Idea Cellular, Vodafone do have packs in the range of about 350 odd levels, and it's a no-brainer that they will have to match what RIL is really offering. So, is it going to be really that easy for RIL to be able to make money as the street is really expecting? Is the cheer really too optimistic? Is something that we're really looking to dissect in this show. And joining us on this show is Rajan Mathews, DG COAI, Sushil Choksey, Director, Indus Equity Advisors, Sudip Bandyopadhyay, and of course Sanjay Kapoor, former CEO of Bharti Airtel. Gentlemen, thank you so much for joining us on this show. Sanjay, let me start with you first. You've run a ship yourself. You know how Indian consumer reacts to freebies, but you also know the fact that when prices really come in, when customers need to pay up for services, a large chunk of customer base really churns. So to that extent, how much of a churn are you expecting from the RIL customer base?
Gaurie, first of all, I think I wish to demystify that we are talking about via these plans only the smartphone customers. And today, when you look at the smartphone customers in the industry, if the average revenue per user in the market is say 170 rupees or something in those ballparks, the ARPU for smartphone users would be upwards of 500 rupees. Now, if that's true and the new normal is being set at 300 rupees with almost unlimited data, because 1 GB per day is a lot of data usage, and voice bundled free, I think it puts a huge amount of pressure on the whole industry to bring down the ARPUs, to be competitive and to retain their customers in the marketplace. Up to now, all operators have tried to offer some freebies for the prepaid customers through their vouchers and top-ups, etc., etc. But I don't think the ring fencing of the high-end customers has actually taken place proactively. This will drive the whole market to proactively try and ring fence their customers who are smartphone users, which really drops the table because those guys contribute disproportionately to the top line and bottom line of all incumbents. And therefore, a new normal gets set in the marketplace. Of course, out of the 100 million customers that Reliance Jio has, all are not going to remain. So you have to do your maths and say, will 40% remain? Will 50% remain? Will 70% remain? The fact is that their table on revenues currently is zero. So anything that goes above zero is going to be accretive for Reliance Jio and probably dilutive for everybody else, because even if the customer doesn't move on a primary SIM, the secondary usage in some form, whether voice or data, is going to move on to Reliance Jio. And therefore, they're going to be the beneficiaries, and that's why I think we see what we see. The second thing that we have to note is that with such wide usage of plans which offer you 1 GB of data every day, the fixed line broadband also gets impacted because there are customers who would be using copper instead of fiber today, and their speeds are nothing outstanding or great. Their experiences are not outstanding. And therefore, and those customers give you $17, $18 per customer per month. Those customers will also come under a lot of pressure, and I'll be surprised if the churn rates amongst those customers don't go up with the incumbent operators. So I think overall Reliance in the short run will gain. Don't know how much will they retain, and it has to go out of the incumbents because the new market will only get created over time.
Yeah, well, that's a fair point. But I just want to mark what happened to Reliance as in what the markets did to Reliance Industries today, and the verdict that the equity markets seem to be giving to these tariff plans. It was the biggest intraday surge since May 16, 2014. I think various objectives will come in at some point of time. I mean, it's of course, yeah, as I was saying, a 10% rise last seen in December 16, 2011. I think the kind of addition that the market cap of Reliance Industries is spectacular. It's bigger than the market cap of a couple of telcos as well. So the market seems to believe that they have mispriced the bonanza that will come in from Jio, and they wanted to add a lot of that mispricing out of the way on day one itself. Sudip Bandyopadhyay is also with us. Sudip, what did you make of this? I mean, the announcements came in during market hours yesterday. Nobody took notice of it. Suddenly the market realized that, hey, there is some method to this madness here. Let's go out and buy Reliance. It's an underperforming stock. What can you lose here?
Niraj, I completely agree with you. The market didn't fully appreciate and understand the quantum change which is happening. In fact, I was on your channel and I did comment that this will be a new kind of a new paradigm for Reliance Jio. Very clearly, look, the valuation of Reliance before yesterday didn't factor in Reliance Jio. And in fact, Reliance Jio was a negative drag on the valuation of Reliance as a whole. Now you look at what has happened, as Mr. Sanjay Kapoor was mentioning, very clearly they will probably not retain the 100 million customers they have today in the new scheme. But even if they retain, as he was mentioning, 50% or 40% of the customers, we are looking at a revenue of anywhere between 19,200 to 24,000 crore for the next fiscal. Now that itself is a significant positive, and it is much better than what anybody was estimating. I think market by and large had factored in that first quarter of the next fiscal they will continue with the free plans, so there will be no revenue coming to Reliance Jio in the first quarter. That was the reading of the market. From there the scenario has completely changed, and we are now looking at a EBITDA break-even for Reliance Jio in the next fiscal. I think it's a significant improvement that I think market realized, after it slept over it, they realized, and that's how market reacted today. I'll also bring one more factor, Niraj, which market probably is still not considering. That's the retail piece. And tomorrow, when not tomorrow, I mean when the DMart listing happens, I think market will realize there is a much bigger entity sitting inside Reliance, which is Reliance Retail. That's again not being valued properly. So I think even today, after all what has happened in the market, Reliance still is sitting on certain hidden treasures which are still not being valued.
Of course. And I'm sure we'll bring this angle in as well, and I'm sure we'll bring in the angle of the other telecom operators as well. I'm looking forward to the chat between Sanjay and Gaurie as well. But Sushil Choksey, to your mind, I mean, is the Jio Bonanza, or is the move today, we are calling this show the Jio Bonanza, but is the move in Reliance Industries today half baking in the benefits that will come in from the revenues from the telecom business starting slightly earlier than anticipated?
Good evening. Thanks for having the show.
Of course.
My personal take is it's just a starting point. What has happened today in the marketplace with 1 crore 21 lakh shares delivered against the total volume. The under ownership with the fear of Reliance's Jio business and some other businesses like Shell Gas and Oil and Gas in India, which was a big drag, and specifically Jio because their investment per share is estimated to be between 350 to 400 rupees a share on the equity, currently the ownership pattern. I think this 400 rupees per share, once analysts are able to understand and the shareholders understand that this 400 is realistic, and the revenue run rate, if you take the third and the fourth quarter for the next year, when the revenue run rate and the customer base, based on what Sanjay said, is analytics is stabilized. Whether how much of EBITDA is sustainable on going basis, how fast they break even, they will assign a very great value where Reliance stock price is concerned. Second thing, keep in mind Reliance gross block, which is at 3,60,000 crores, with core industry capex which they are doing in petrochemical business of 1,20,000 crores roughly, and the other capex on telecom which would be in the vicinity of 1,50,000 to 1,80,000 crore, which would be capitalized in the balance sheet in FY year ending March 18. The gross block of Reliance would look like 6 lakh crores, and the debt in the vicinity, net of cash, would be in the vicinity of 1,10,000 crores. I don't see why Reliance market cap at that point of time, with all the fears receding, led by Jio and maybe added by shale gas recovery and retail business, as my other co-panelist said, market cap would surprise, and the under ownership of Reliance needs a purchase of at least 8 to 9 crore shares is our estimate, and that would, because most of the major funds, domestic or international ownership pattern on the stock is very poor in the last 7-8 years of performance on Reliance, and I think the fear was rightful so far, and with the planned rollout, I think most of the funds would tank up the share between now and April.
Right. All right. Mr. Choksey, let me just get Rajan Mathews into the discussion right now. You know, as we talked about earlier in the show as well, that the biggest impact of the tariffs that really came out yesterday from RIL was the fact that ARPUs are now pretty much going to be capped. So yes, it's great news for consumers, but if you really look at Bharti Airtel, Vodafone, Idea Cellular, they really do stand to lose significantly, in the sense that the high-end ARPU customers may also now be capped at that 300 range. Rajan Mathews, how do you respond to that?
So I don't think either Reliance Jio or any other company is assuming that the quantum of consumption will stay flat. I think what is expected is that the higher end consumers will continue to consume more than perhaps what is in a bucket plan, and that will obviously continue to ratchet up. So there's an incremental upside. So we'll have to wait to see how the freebie period has allowed the consumer to go perhaps from an average consumption of 2 gigabits to perhaps 8 and 10 gigabits. So it's really moved the marketplace up in terms of the quantum. So everybody is hoping that with the increase in quantum, all right, they can perhaps monetize that in terms of more than just 300 rupees on the upside.
Sanjay Kapoor, let me come to you on this. As Niraj was pointing out, that this was a set of offers that really came out yesterday in market hours, and there was no reaction till today morning. And that is, of course, when we saw a lot of activity happening in the RIL stock. But my question to you really is that, how much of this do you think is sustainable? Do you think a lot of this cheer from brokerages, from the street, is something that would actually translate into the model being sustainable right now? Sanjay Kapoor?
Look, I think what the market and everybody else who's a part of this industry needs to take cognizance of is that there are some new normals that are coming into the marketplace. India has established at least 3 or 4 new normals. First and foremost, 4G is now the technology which is going to serve a good customer experience on data. I think everybody realizes that, and I'm sure all those who do not have a 4G play today would be worried about refarming their spectrum, reprogramming their technologies and investments to have a 4G experience for all their customers. Second, India has moved away from any metered plans and now has got into a regime of bucketed plans. This is again a new normal. The third new normal is that voice is perceived to be completely free. It's at least perceived to be completely free because it's bucketed. And finally, VoLTE seems to be the next technology which will host voice for everybody. And even the incumbents, I believe, are trying out VoLTE, and that might be the new normal. Given all this, obviously the incumbent operators seem to be suddenly be followers in the market rather than leading the thought waves in the market. And I think that's what is probably creating this frenzy in the market, where people are thinking, here's a challenger who's come into the market and he's setting the new norms for the industry going forward, and everybody is just trying to catch up. Now this has changed the way telecom was being serviced. I've said this earlier that all said and done, ultimately it's not about price. I think logically a new challenger in the market is trying to inch up the price from being free to now charging something. Will he for all times to come charge 300 rupees and cap it? I don't believe that. And I think that's why he's taking one step at a time. And I think right now he's defined the road for the next 1 year. These are valid for a year. And a year from now, the market landscape would change. The market would have consolidated like rest of the world into 2 or 3 or 4 operators at best. And there'll be 2 solid players in the market. And I think then the pricing strategy will be very different. However, what will then determine the winners will be the guys who offer better quality of experience in the marketplace. And I think everybody will work towards that. But that in a country like India cannot happen without investments, and that's the dilemma. I mean, if the dichotomy really pushes you to an edge where the market is over leveraged, we are not making as much money as we were making earlier, the revenue table has fallen down, and yet we are supposed to invest a lot of money into future technologies. I think that's going to be a big pain point for everybody to say, how do we cough up more money? And there's somebody who's created such large capacities that a market that consumed only under a GB a month per customer is now being said, okay, go and consume 1 GB a day. So there are these new normals, and I think the market is right now looking at all this.
A question, Sanjay, very quickly at mind is that while a lot of people are saying that the ARPUs that might come into Reliance's end is 300, which is double the average ARPU of a normal, I mean, Vodafone is 158, 159, or Airtel could be 175. But the higher end customers of Airtel and Vodafone would be probably in the bracket of 500 to 700 ARPU. If I'm not wrong, at least one brokerage note was saying that. And maybe Reliance could wean away. I mean, that's the target. Some of those customers going out, does it put pressure on the average ARPU, even if they don't lose customers, the incumbents? Does it put pressure on the average ARPU of the incumbents for the next 12 months at least till when we have the visibility?
No, absolutely. I think I started off, with that, and I said that the average ARPU is actually a little misleading because it is the top 15-20% customers who give you 40-50% of your revenues, and their ARPUs are drastically higher compared to the rest of the marketplace. And if those guys get discounted and capped at a particular level, the life changes. I mean, the bottom, there are guys who just give you 10, 20, 50 rupees a month, and that's how the average comes to 170. Now, can you imagine a scenario? The most profitable customers are now inching towards becoming either loss-making or on the borderline. That changes the whole equation. And how do you ring fence them without being competitive? So I think if I was sitting in any camp today, I'd be most worried to say, no matter what happens, I have to retain my customers. Because if at the end of the tunnel, I do not have customers with me, what am I going to fight for? So I think everybody is going to be holding on tight to their customers as much as they can. But that's going to be exceedingly dilutive. And only one who's going to see any accretion in his revenues, top line, bottom line, is the new entrant.
Okay. So Sudip, I want to now just change the scope of this discussion to the impact that it could have on other telcos from a pricing or a market's perspective as well. We've discussed Reliance, and I think both you and Sushil are in the camp that believe that this is just the start. There could be more in store. What is good for the customer, Sudip, is not necessarily good for the company. What could happen to a Bharti and arguably a Vodafone Idea combined on an Idea right now as we see it?
Well, Niraj, I will put a slightly different perspective to the entire thing. Let's say since the time Reliance Jio launched till 31st March, the playing field was not level. Reliance Jio was providing service without charging anything. and the other operators were charging their usual charges. Of course, they were trying to be competitive, but they were charging. So it was not a level playing field. At least from 1st April, all the operators are charging, including Reliance Jio. So if I'm a Reliance Jio user, I will start paying a fee to Reliance Jio. And this brings me at some level to start comparing what I'm paying Reliance Jio with what I would have paid with other operators, which was not happening not going to happen till 31st March. So to my mind, I think other operators, yes, there is an impact on their profitability. Yes, they have to rethink their business model. Yes, they have to ring fence the high value customers. All that is absolutely right. But I think to an extent, they are also at least they have a visibility on what Reliance is trying to do. Till yesterday, before Mukesh Ambani's conference, they didn't have any clue as to what's going to happen. They were playing in the dark. Today, they know exactly what Reliance has spelled out for next 1 year. They have to decide their strategy, and they have to, come back with some strategy which can help them retain customers and retain their ARPUs. I'll also bring one more angle to this entire thing. I think now the game starts on the service quality. Reliance Jio has rapidly expanded. They have got that 100 million customers, and I'm sure they're trying to get more customers. But now once they start charging customers, the entire game will be on the service quality, and the top end customers, which everybody is trying to retain in their fold, they are extremely conscious about the quality of service. The quality of service will determine how things plays out going forward.
Right. Sushil Choksey, let me bring you in this discussion. What's your take as far as some of the other players in this game are concerned? Bharti Airtel and of course Idea right now, even when of course the merger happens with Vodafone, it will become a formidable player. But nevertheless, how would you, play a Bharti right now? What would be your long-term view, given the fact that as we've been talking that, there is downward pressure on tariffs, there will be downward pressure on margins as well. And for a foreseeable future, we're talking about at least 3 to 4 quarters right now.
I think my take is that as Mukesh Ambani has rolled out and taking such a big investment in Jio, where other existing companies, one is a consolidation phase, so there will be some disruption in the existing business model. At the same time, further consolidation would be visible, and the experience of customer has been little unsatisfactory in last 12 to 18 months because of call drop, internet not being that efficient. So I think most of these telcos will have to go for upgrade. As Sanjay said, refarming, all the acquisition, consolidation, some will have to sell spectrum. So I think all the basic necessity of a consumer upgrade will be a one-time expense for existing players, which may be a necessity from a customer point if Reliance Jio wants to achieve what they are stating in their opening statement, that digital data is digital, it's oxygen for digital life. And they experience, they want to make it the world class best in terms of service to the consumer from what they are going to offer. So if these points have to be matched, it would be only visible with customer service, which will begin from 1st April, and how the consumer is able to satisfy. And if that's going to happen, people may have a lot of shifting from existing telcos and fixed line also at corporate offices as well as at residents. So I think it's a big challenge. We need to watch out between April and September, and then take a positive view how these other telcos will behave compared to Jio. Jio has much less to lose, others have much more to lose compared to Jio right now.
Absolutely. Others have a lot more to lose. Absolutely. Which is why, of course, we are seeing the way RIL stock responded today. And of course, we've been seeing how Bharti and Idea have been responding over the last couple of weeks. But, Rajan Mathews, let me bring you back in this discussion. Of course, telcos will be breathing a sigh of relief because, freebies will not be continuing any further. Come April 1, commercial tariffs will kick in. At some level, do you think that a lot is really being made out as far as the cutthroat competition is concerned? Because the moment commercial tariffs come in, some amount of this competitive intensity will actually go down. And also, given the fact that Reliance Jio has achieved its 100 million target, do you think that the competitive intensity, the competitive pressures in the market may actually reduce, and that could in fact be a huge plus for the incumbents?
Yes, there is definitely a sigh of relief from the industry, because I think what the industry was concerned about was the continuing freebies that might continue to deteriorate the revenue stream of the incumbents. The fact that now there is a definite amount that has been fixed and at 300 plus rupees and a one time of 99, that at least allows the rest of the industry to calibrate around what they need to do.
Sanjay, my last question to you before Niraj and I wrap this discussion. We've talked at length about how, India is now going to be a 4G market and how other companies will have to respond to what RIL is really doing. But in your sense, just coming back to the question that I asked in the beginning, how much of the business model do you think is really sustainable as far as RIL is concerned? Do you think that come April 1, you could actually see the customer churn being as much as 40%, 50% out of the 100 million customer pool? Or do you think RIL will actually be able to contain some of that customer churn?
Gaurie, I don't want to be crystal ball gazing. All I can understand is that right now, whatever moves from RIL you've seen are only addressing the smartphone market, and that to 4G for them, which probably is a single digit number. And that has created the havoc that it's created. I do believe they are not in here for those smartphone customers alone. They have their eyes on a very large mass market. One has been reading, hearing about their next move on 4G feature phones, which will be redefining and covering a much larger canvas in the marketplace. I will wait for them to play that move before we take any call on whether 40% guys will remain or 50% guys will remain. My own take is this is the beginning announcement. On tariffing, this is not the last word. You will see more coming, and I think people at the bottom of the pyramid will also get addressed by probably cheaper tariffs and a better experience, because if we are going to have VoLTE at that end and we are going to have 4G surfing instead of 2G GPRS and edge based surfing, the game will change even at that end. And I would wait for the full announcement before we jump to the conclusions on whether 40% will remain or 50% will remain, because I think they have their eyes on every end of the market. They are not here to serve only one end of the market, and let's wait and hold our breath till then.
Okay, gentlemen, afraid we are out of time on this show, but we've gotten almost all the bases covered. So all of you, Sanjay Kapoor, Sudip Bandyopadhyay, Sushil Choksey, as well as Rajan Mathews, thanks so much for joining in. I think the consensus is wait for some time to figure out, but from a stock price perspective, Reliance is probably only getting started. From Gaurie and me and the team that put this show together, thanks so much for watching.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.